Okay, good morning. My name's Ryan Dividock. I'm the supervisor for the Planning, Zoning, and Land Use Unit, which is part of the Planning and Local Business Development Division here in Oakland County. Welcome to today's virtual planners gathering, Oakland County's business loan programs. Just a few reminders, the meeting is being recorded and will be made available on our website. And if you have any questions, please use the chat function in Zoom and direct your questions to Jim Schaefer. Jim will moderate a question and answer session after the presentations have completed. So let's get started. It's my pleasure to introduce our speakers today. We have Kevin Congdon with the Financial Services Unit here as part of Economic Development Department in Oakland County, and Belinda Turner-DuBois with CEED Lending and Oakland County Revolving Loan Fund. Thank you both for joining this morning. Kevin, the floor is yours.
Ready. Thank you, Ryan. Appreciate it. Yeah, as mentioned, my name is Kevin Congdon. I've been with Oakland County Business Finance since about 2008. I've worked pretty much exclusively with the SBA 504 program for that time. And yeah, just happy to, enlighten you all about it, and hopefully it can help help you guys out. So go ahead and take it away. So what is 504? SBA 504 is a loan program that partners with a lending institution, bank or credit union to combine up for a low market fixed rate financing. This is specifically for fixed assets. So the most classic example is you have a business owner that is looking to buy out of their lease, wants to buy their building, or they want to move. Or they also may have a need to purchase, heavy machinery or other fixed assets. That's what it's for. So for businesses, obviously manufacturing mentioned there, retail, wholesale, distribution, services, doctors' offices, restaurants, manufacturing, construction, all of those sorts of things. For-profit business, we can help finance fixed assets. And then what are some of the eligible project costs associated with that? Land acquisition can be, a part of it. Building construction, so we can work on a ground-up construction project, acquiring a already existing building, and also all of the renovation costs that are included with it. As I mentioned too, machinery and equipment. Also, professional fees associated with the project, architecture fees, lawyer fees, things like that. And that sort of thing. Also, semi recently, there is the ability also to do refinancing of existing fixed asset debt. A little bit more complicated. We don't have as many examples of those today, but that is available as well. And then go ahead and click through these, Ryan. And then, yeah, so here, go back one. I'm sorry about that. There you go. Thank you. The basic percentage breakout of how the 504 works is essentially you're gonna go to your bank or credit union. They are gonna eventually finance 50% of the project. That's going to be on their long-term financing. Typically, they'll have a 10-year, 20-year amortization on that piece. Then the SBA partners up. We do 40%. And then one of the major benefits to the borrower is the down payment, or the equity down is 10%, which is much lower than a conventional. And then go ahead and flip it. And then there's two other scenarios. If the project happens to be a special use building, your bowling alley, I guess there's not a lot of that today, but very specific special use buildings, it would require a tick up in equity, which would be 15%. The other thing that would require a little bit more down is if it is a startup business, which we have a lot of this as well. SBA defines that as less than 2 years of operation. So if they're less than 2 years of operation, it would require an additional 5% as well. And then that second pie chart there just shows a combination of both. So there's a couple examples just to see it. I know this is always helpful just to kind of see the numbers break down in real life examples, right? This particular customer had a bunch of physical therapy locations. We've probably worked on, again, this is also good to know that we can do multiple transactions with customers. There is like a hard cap, I think 5.5 million of SBA money that they can get. So this one was just a purchase of an existing building. It was move-in ready. There was no renovations, none of that, just a little bit of professional fees included. You had your typical 50-40% breakdown for a total project of $995. And then, yeah, one thing to note, that SBA 40% portion right there, that was on a 20-year fixed rate. So again, along with that 10% down as a huge benefit, the other benefit is the SBA portion is on a fixed. Nowadays, it's a 25 and 30 option, 30-year option. Okay, so third-party lender loan. So third party being the bank or the credit union. They do set their own rates and fees. So a lot of times when a customer's coming to us and needs to find a bank, we always recommend they shop around, talk to a few different ones to get the best rate and terms that works for them. We're able to partner with any of them. We've worked with out-of-state banks, credit unions, you name it, small community banks to the Chases, Comerica's of the world, and the bigger banks. Basically, what the bank is going to do, they will require a 10-year term on their piece. So that is another benefit too, because a lot of banks will have a 5-year note reset, and you may be left looking to refinance after that. But when they use 504, they are required to start up with a 10-year term when they partner with us. So that's another benefit as far as longevity for the customer. And it does mention a 7-year or 10-year loan. That's not an equipment loan, which I haven't had too many of those lately. But anyways, go ahead. So yeah, the real estate loans, these are the core of what we do. You can have an SBA 504 on a 10-year note. We've had a few of those, but really the 20 and 25-year term. I know I said 30 earlier. I'm thinking residential. That's my fault. It's 20 or 25-year fixed. Again, equipment, if you have a manufacturer that wants, hey, I need a couple CNC machines and I want $500,000 for this, and I want to do an equipment loan, sure, we can do that on a 10-year term, no problem. If the equipment itself is something that has a useful life of 20 years or more, it can be financed the same as the real estate loan. No issues there. We are also an advantage to the bank or credit union to use this program. We are fully subordinate to them, so they're going to be the first mortgagee, the first lien holder on this, and we are behind them. So that does give the bank a little bit more leeway and let them look at more deals per se. SBA fees, those are all financed into our loan amount. So there's nothing out of pocket with that. And then the fixed rate for the full term of the loan. Again, that's basically the two key benefits, the 10% down traditionally, and then also the fixed rate on our piece is really what sells it. And borrow equity, again, cash, land equity. We've had plenty of examples where, somebody's already acquired land that they want to build on. That's fine. They can be seller financed equity, borrowed or gifted from family, all that stuff. That all works. Okay, and then massively core requirement, and one of the most main phone calls that I get is somebody wanting to finance an apartment complex or some sort of strip center, and those things are unfortunately ineligible. This program is driven by owner occupied real estate. So the company that's financing this building must occupy at least 51% of the space. So they can tenant out some of it, but it can't be, I have a corner office and I lease out 9 other ones, and that just doesn't work. So it's owner occupied is a key driving factor for this. So there's no investment real estate, unfortunately, with 504. Some public policy goals. These aren't really anything to worry about. Basically, you have an aggregate amount of 5 million. Like I said, there's a few examples where you have some franchisors that want to just, keep, we have one customer that has multiple Culver's locations, and they are up against the 5 million cap as they grow their enterprise, and things like that. There's like I said, there's 5 million cap and then 5.5 if it happens to be a manufacturer. So that's there as well. But just shows that we are able to do multiple projects. Collateral on, an appraisal on the property is required, obviously. If it's below $500,000, that is waived. We don't need that. And environmental is also a key component of approval as well. SBA does need to approve that too. So typically, it just depends on the property. A lot of them end with a phase one, but a lot of them go beyond that. We're in Michigan. We have lots of rust belt qualities to some of the properties around here, industrial wise. So that's always something to consider as well. And then, some more collateral. Again, I mentioned this already that the bank is in the first lien position. We are subordinate to the bank. Personal guaranteed, much like the bank would or credit union would also do this as well. Anybody that's owning 20% or more of the operating company or the real estate holding company. A lot of times this may be set up to where mom or dad is buying the building for them and it's in their name, and then they're leasing it to their child's company or whatever, but the parent would have to then also guarantee as well. So if you're 20% or greater in either the LLC, the holding company, or the business, you'd have to be a personal guarantor. Additional collateral may be required, not really worth getting into until you see it. It's really case by case. The only main thing is if it's 100% owned by one person, they usually want a life insurance assignment, which is usually not a big deal. So, and credit criteria, again, this is all going to mirror what the bank does as well. Adequate cash flow coverage. The bank is going to require the same thing. We typically look at, wanting 1.2 coverage for all the debt that's there. That includes existing debt too. Sufficient collateral to secure the loan. Obviously, we get the appraisal to make sure that's all good. And sufficient working capital to sustain growth. And this all goes through, the credit process that the bank does, and we do the same as well. And then ineligible project costs. So SBA, the core program is SBA 7A, and a lot of that is going to be your startup loans, inventory. You need capital. You need those are things we can't do with 504. Along with that is, like I said, working capital, cannot do that with a 504. Taxes, vehicle type assets, things that move, autos, trucks, things like that, we cannot finance. And counseling finder fees, franchise fees, those sort of things. It's got to be attributed to the hard asset that's being financed. Yep, click through these 1, 2, 3. Yeah, and I mean, I kind of touched on these throughout the whole time. Typically 10% down, huge benefit. Low fixed rates. I know I have a slide later that shows what the March rates are. The rates do get set once a month, typically the middle of the month. And yeah, they're fixed for that time period, and they're typically going to be lower than the bank for the most part. Long-term financing, as I mentioned, 20, 25-year terms, and then the extended terms on the bank portion are the core benefits. The refinancing, these are very case by case. Again, we can do refinancing of a note that has been set up for the same purpose that a 504 is. So if it's a real estate only note, it has to meet some of these requirements. It has to be at least 6 months old. We can now refinance government debt. Before we couldn't. If it was a prior SBA 7A loan, we were not able to touch it or do it. We can now do that. The problem is that most 7As have multiple things in them, and that it just makes it a little bit more complicated. But anyway, so as long as the note is, we're able to extrapolate the fixed asset financing part of it, we can then do that, and it has to meet all the same requirements that a traditional 504 has to. Okay, a couple more examples. Yeah, again, I mentioned that Culver's franchise. I know this particular owner has, I think, 3 or 4 of them with us. These are expensive to build. Yeah, land acquisition, $1 million, construction and equipment for a total project about 2.8. This was their first one, so this had that startup requirement. So the bank ended up doing 50%. SB portion then gets ticked down to 35%, and then the equity in was 15% because it was a startup business. And they took advantage of a 25-year fixed. Excuse me. And then this is we get this example kind of frequently too. You have somebody who is going to be buying the business from somebody who's looking to retire. In this particular case, the gentleman was financing the business acquisition, which I believe was in the million range as well. He did that with an SBA 7A. And then so again, we're not involved in that part of it, but we are able to pair the SBA 504 loan for the business part, or I'm sorry, the real estate part of it. So he had two different loans going on at the same time, and obviously both were with the same bank. But we were able to achieve that, and he was able to purchase the business and the building simultaneously. Direct purchase 1.5, and met the classic 50, 40, 10% on a 20-year. And I'm sorry, the business value is 3.5. I don't know where I got that, but yeah, so we're able to do it all together, and there we are. And then a refinance example without any kind of renovations or expansions. This one just shows that the appraised value here was far beyond what the balance was. So in this case, this just shows that through refinance, you were able to basically put no money down. They already had their equity in it by the appraised value. So this was just a direct taking a 7A loan that may have had unfavorable terms and converting it over to an SBA 504 for that long-term financing and lower fixed rate, and yeah, benefit for the borrower. And then, yeah, the fixed rates, again, the 25-year and the 25 years really what is mostly used today. 20 years kind of getting phased out, but they're both still available. And refinance rates are similar, a little bit different equation, but they're similar. And this is just kind of where they're at, 6.24, 6.3, which should be typically lower than what the bank is giving on their portion. So when you blend all that together, usually it's a much better deal for the borrower. And then, yeah, there's contact info for Bill, myself, and Kathy Raskin, our supervisor. We are all basically loan officers by trade. We all work together on these, and feel free to shoot me an email with any questions, give me a call, and I'd be happy to run through any examples you have, and yeah, answer any questions you guys have. Thank you.
All right, thanks, Kevin. So good morning, everyone. My name is Belinda Turner-DuBois, and I'm the director for CEED Lending. We have actually, last year we celebrated 41 years of being around. We are a nonprofit organization, and we have had a partnership with Oakland County since 2010. Next slide, Ryan. So our focus is working with borrowers who cannot secure traditional funding. And we cover 9 counties in Southeast Michigan. Of course, I mentioned the partnership with Oakland County, but you see the counties that we cover here: Hillsdale, Jackson, Lenawee, Livingston. Pretty much that is our footprint. If you have a business outside of one of those counties, or if you have a friend who has a business outside of one of those counties and still looking for microloan funding, you can go to the website, which is sba.gov, type in microlender, and you can find microlenders across the country. So, and I already mentioned we are a nonprofit organization. So I'm going to talk today, that's okay. We are a nonprofit organization. I'm going to talk about 3 of our loan programs today: the microloan program, our LIFT loan program, and the Oakland County Revolving Loan Fund. Each of them has, their own particular nuances, But again, the focus is to provide funding to business owners who cannot secure traditional funding. Next slide, please. So the microloan is the first loan that I'm going to talk about today. And again, we service all 9 counties. This loan starts at $5,000 and goes to $50,000. And our maximum term is 6 years. And what we like to do with this loan fund is to purchase assets for the business. So we help with the purchase of, equipment, machinery, inventory. We will do some working capital. We won't do $50,000 in working capital, but if we're hoping to purchase maybe a truck or some piece of equipment and you need some working capital, we can throw that in as well. Next slide. The next loan fund is our LIFT loan. And as you can see, we can finance a little bit more with this one. It goes up to $75,000, still the 6-year term. We're more focused with the LIFT loan in areas that are really not receiving the traditional lending. Those folks who are struggling with their businesses, they're in underserved markets. And I list a couple of examples there: Pontiac, Southfield, Madison Heights. Those are really the areas that we're looking at to help us. And the LIFT loan will do that. Again, focusing on purchasing assets for the business, and we will provide some working capital as well. We can sometimes combine the loans if necessary, but still the maximum would be $75,000. So an example could be, maybe for some reason we can provide you with a $50,000 microloan and then a $25,000 LIFT loan, still making the maximum outlay $75,000. Next slide, please. Thank you. And our Oakland County Revolving Loan Fund, which has been around for about 3 years now. And this loan is specifically for Oakland County businesses. It goes up to $200,000. And again, purchasing assets for the business. We can also partner with banks or credit unions. So an example could be, maybe you've gone to your bank or credit union and you've applied for maybe $300,000 and they approve you for $200,000. We can be that gap financing and come in with those other dollars that are needed to make that transaction successful. So we do partner, and we'll take a second or third lien position, no problem. We understand that the bank or credit union has to be first. So next slide. So the revolving loan fund really, as I mentioned earlier, is gap financing. We're really looking to help that business owner because they can't secure the funding that is needed. It's also focused on job creation. So for every $50,000 that we loan, we're looking for 1 job to be created. And we are looking to report that information twice a year to the Economic Development Administration. We will work with startups as well as businesses that are existing. And our definition of startup is a business that has been around for at least a year and generating revenue. So we unfortunately will not do loans for a business that has not generated any revenue. We are looking for there to be some cash that, we can see that there is a need for this business, or there are customers for this business. So again, startup means that there is some revenue that has been generated. And of course, if this is an existing business looking to expand, we are certainly open to that. Next slide, please. So who's eligible for the revolving loan fund? I mentioned earlier, we do not fund nonprofits. It has to be a for-profit business. And we are looking at smaller businesses. So something under $1 million with under 10 employees is really the sweet spot that we're looking for. And I already mentioned that we are looking at job creation. That's most important for the revolving loan fund. And again, the business owner has to be located in Oakland County in order for us to provide the Oakland County Revolving Loan Fund. Next slide, please. So what's different about our loans? We are not based specifically on credit score. Any of the 3 loans that I've already talked about, we're not credit score driven. So when I pull a credit report, whether that credit score is 300 or 850, that in and of itself does not dictate approval or denial. I am going to be looking at the trade lines to see how you've managed your debt, but the credit score itself doesn't tell us what to do. So that's very important. I did mention that we will partner with other lenders, whether traditional or non-traditional. We do provide technical assistance to our borrowers as well, pre-loan and post-loan. So pre-loan could be getting you ready for that loan. Maybe we need to help you with understanding your cash flow, or really helping to identify who is your target market and how are you going to get to them. So those things we may need to help you with before you're actually ready for the loan. And once all that's done and we actually have the loan in process and we're closing that loan, we continue to provide you with technical assistance. It could be setting up monthly meetings or bi-weekly meetings. All of our businesses are different and they have different needs. So we may meet quarterly, and that could be an in-person meeting or it could be virtual. But what we're looking to really do is to try and support you as much as possible. So when you are growing and have outgrown us, I can then take you to a traditional lender, pay us off, and then we start the process all over again. And I've done that many times with businesses that have outgrown us. We can't provide any other funding and they're growing beyond us. I can take them then to traditional lending. So that's something that's very important. I didn't mention earlier, but I am a former traditional lender. I was at Chase for a number of years. So I have a number of connections with traditional lenders. And again, that's where we want you to be. And eventually is with our traditional lending friends, where, then you can go and you're bankable from that point forward. So next slide, please. So I wanted to just share with you some of the customers and some of the different types of businesses that we have had. Clean Cut Dumpster is a business actually located in Detroit. And you'll see him standing underneath the equipment that we helped him purchase. This is obviously a dumpster company. He rents out the dumpsters. And actually we've done now 3 loans for him, 3 different loans, and he has successfully paid us back and continues to grow. And I know the next deal will probably not be something that we can do, but it's almost time to take him to conventional funding. Next slide, please. The Event House is a business in Lathrop Village, and the owner, you can see her there. The Event House has been open about a year now, year and a half, and it's a beautiful space, smaller space. So, if you're looking for an event for 150 people, whether it's, your own personal event or something corporate, this is a wonderful place to have that event. So again, we helped open this business with providing her with access to capital to help purchase some of the tables, chairs, some of her sound equipment, lighting equipment, all of that stuff. So next slide. And Karen Akuri is one of our success stories with the Oakland County Revolving Loan Fund. If you go to any number of grocery stores now, because she is really growing, but places like Zerbo's or Fresh Time, you will see her salad dressing. It's called Drench. And Drench is all clean, all natural. And Karen, in the last 2 years since she started with us, has been growing in leaps and bounds and has her dressing in many stores across the country now. So not just in, the Oakland County area or just in Michigan, she's across many states. So we're very proud of that. Next slide. And again, this is just some of the different types of flavors. When we started, she had 4 flavors. Now she's got 7. So again, very proud of of her salad dressing and what she's done. Actually, Sprout is another place that she's selling. So you can see Fresh Market, Whole Foods, and even in Myers now in some of their salad mixings. She will her salad dressing will be in the mixes. So very proud of that. Next slide, please. So Little Lou's Hot Chicken is in Berkeley. And these 2 gentlemen came to us. They had a food truck and opened Little Lou's, which is a brick and mortar, but they were looking to expand. And we helped them with, more equipment in the kitchen and actually adding to staff. So you may see the food truck sometimes downtown Detroit. So Little Lou's, and then of course the location is in Berkeley. Helped them about a year ago with the revolving loan fund and helped them with expanding. And I believe they're in the process now of purchasing a liquor license. So, and if you're in the area, please feel free and stop by because the chicken is really good. Next slide. And again, just more about Little Lou's. They are located on Coolidge in Berkeley. So, and we also help them with outdoor seating. So again, as the weather gets warm, be sure and stop by there and, get yourself a sandwich or something and sit out and enjoy yourself. Next slide. Here is my contact information. So there's my email address along with my phone number. And of course, the website for CEED Lending, which is ceedlending.org. When you go to our website, you will see information about our loan programs, but there's also a tab that says Get Started. You can click on that Get Started tab and answer 5 or 6 questions, and you will receive a phone call back from someone on my team within 48 hours. And then we can have a dialogue with you about what your needs are for lending and, see if there's something that we can help you with now or sometime in the future. All right. Okay. Questions?
Excellent. Great presentations, Kevin and Belinda. Thank you very much. We do have a few questions. What is the average processing time from start to close for both of you? Kevin, go ahead.
Sure. Yeah. I would say like a generic example would be maybe 6 weeks for getting the approval done. A bank is going to go through 2 different, maybe 1 to 2 different loan committees. And then we kind of mirror the same process. Once we have an approval, it really is kind of dependent upon, how long an appraisal takes or what other complications there may be. But, typically within a couple months, as long as there's not a huge, renovation project, things like that, it can be done.
Okay. Belinda?
So, yes, similar with us. Once we have everything from you that we need, we're looking at about 4 to 6 weeks. So,
okay. Very good.
Yep.
Question for Kevin. I understand apartment real estate is not allowed and the owner must occupy the majority of the building. Are there any situations where mixed use buildings in downtowns are eligible if the commercial section occupied by the primary business is over 60% of the building and the remaining is an apartment? This would apply in older traditional downtowns.
Yep.
Think second story.
Absolutely. Yeah, we do have examples like that. Again, they're real hard on the 51%. So yes, absolutely. We have Main Street buildings that have 2 apartments upstairs and they are less than 40, they're 49% or less, that's absolutely fine. Yep.
Okay. And Belinda, on your end, is there anything relative to that?
No, because we're not involved with real estate, other than the revolving loan fund. And again, with 200,000, we're probably going to be partnering with a bank or credit union and helping with perhaps equipment to put in that space as opposed to the actual purchase of the real estate.
Okay, so if a facility was like a live work type arrangement, that wouldn't impact your,
No, not at all.
okay, great. For Kevin, the SBA recently provided an update on how borrowers can use C PACE financing along with the SBA 504 loans. Combining CPACE in the capital stack will save borrowers money and help our county environment at the same time. Is there a possibility to meet and have a discussion on this?
Yeah, I believe this question sounds familiar from a meeting prior. Yeah, I mean, if PACE funds are going to be used to be part of the equity down, that's fine. The question is really not going to be for me though. It's going to be for the bank that you work with, because again, the bank is the primary person, or I'm sorry, the primary contact first. So if the bank is going to allow that, then we would follow suit. But I'm not going to be the one to decide. I can't decide that. So it really matters what bank or credit union you're working with. But we have had some creative ways of using different grants and funding sources for equity. But again, this is all going to be driven by the bank that you work with.
Okay, so maybe the best would be to reach out to you in a phone call and
Sure.
Okay. All right. Next question for Belinda. What are the rates on the small micro loans less than 10,000, or do they vary? And do you work with very small businesses that have one employee, like a beautician, at-home daycare, lawn care, etc.?
Excellent question. So the interest rate right now for the microloan and the lift loan are at 7%. It's a fixed rate. And yes, we do work with very small businesses. Most of our business owners are 2-people shops or 1-person shops. So absolutely, we can work with solopreneurs. That's
Okay.
yeah, we welcome them absolutely. And you mentioned hair salon. Absolutely, we have some of those. We have some barbershops in our portfolio, so definitely.
Okay, great. Next question, is CEED geared towards women?
We do loans for men and women. So let me just give a little history. When we started the organization 40 plus years ago, the name of the organization was Center for Empowerment and Economic Development, or CEED. About 8 years ago, we changed the name of the organization to Great Lakes Women's Business Council. Well, of course, my lending team, we were like, oh no, you can't do that because people will think we only do loans for women. So CEED Lending is an initiative of Great Lakes Women's Business Council. So we do loans for men and women.
Okay, great.
Okay.
All right, I'm not seeing any other questions. If anyone has any last minute ones, you can pop them into the chat to me directly. All right, I'm not seeing any others. Ryan, it's all yours.
Yeah. So, Belinda, Kevin, thank you for joining us today.
Yes.
Very informative presentations. Also, thank you, everyone on the call for joining us as well. I look forward to seeing you at our next scheduled planners gathering on April 29th for a presentation on barrier-free design. So again, thanks for joining us, everyone. Have a wonderful day.